Hey traders, John Howell here, and I just want to do a bit of a market update across the markets, looking at the mining stocks as well too. I'm going to be looking at interest rates, also be looking at the Fear and Greed Index, and also silver as well too, because silver's actually been, so I'll get into silver and also gold as well too. And there's a few other things that I really want to talk about. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it. Traders, I've actually just literally this week, I've created a brand new bundle about, I know that the better you can read the charts, the better trader you'll be, right? There's nothing perfect out there, nothing set in stone, but the better you can actually read the market, the better you can read the charts, the better trader you'll be. So I've put together like my top 4 chart reading and trading techniques and that I've learned over the last 17 years. I put it together in a bundle, plus a few other really awesome bonuses like my #1 income trading system. You get access to a live X Factor event with me as well too, plus a few other things. For $4. And again, I'm running that today. So if you go to johnsflashsale.com, go over there right now, you'll be able to see all the details. And if you're struggling with trading right now, then this is the very first step you need. Again, it's only $4. So go to johnsflashsale.com for $4. You can get access to that right now. So let's have a look at here on the stock market here. So the stock market obviously is continuing to have this downward phase through here. And the really interesting thing is that I'm seeing I do believe that this is probably going to be like a 2018 representation or a repeatation. Is that even a word? A repeatation. There you go. There's one for your dictionary. The repeatation just simply means it's repeating. So if we have a look at this here, right, we could be getting in line with something like, see back here, back in 2018 into 2019, we had the topping action, as you can see. Then we dropped down, we started to have the free fall, and then the market started to really gallop up and right? And so when we're seeing what's going on right now in the markets, we're seeing this overall major topping pattern, right? We've got a shoulder here, and we've got a head here, and we've got a shoulder here, and if we're going to use that as the shoulder and headline, right, that's going to be somewhere where the neckline is, somewhere through there, and then the market's dropping down. So that's what the market's doing right now. So the really big factors that I'm watching right now as I speak is how does the market operate over the next couple of weeks, because this is going to be really key in telling us whether my 5,500 target is likely to be hit by the end of this year. That's right, I did just say my S&P 500 target is 5,500. Okay, people say, "Oh, John, that's nuts." Okay, you know what? You actually may be right. I may be wrong. I'm happy to put my little, or actually I wouldn't say they're little, but my kahunas out there, right, and to say what I think. I may be wrong, but that's where I see things going. And the reason why I say that is because I see things really shifting on the second half of this year when it comes to inflation, when it comes to the interest rates and so on and so forth. I really see things shifting from there. And again, I'm going to get into the interest rates in just a minute here. But there's 2 really big scenarios that we're watching out for. There's a massive topping pattern here, yes. But what happens next is going to be majorly key. Let me explain here. So, do we either if we continue, we may even continue down a little bit more through here. If we do something like that and then we start to rally up and then we start to do this and then we start to roll over, you know what, traders? Forget my 5,500 target, because anything can happen, right? Because we've still got like, how many months? 7 months left, right? Still got 7 months left of the year. Anything can happen. As you know, 2 weeks, a really good strong movement can get us back to almost new highs. We know that, okay? So people say, "Oh, John, that can never happen." Like, anything can happen. Can you imagine the market not doing much and then suddenly, come June, come July, and then suddenly August out of nowhere, boom, the market just like takes off, right? So if we get something like this on what's happening through here, and we're coming down through here, because this is the neckline here, right? We've got the shoulder, we've got the head and shoulder, and we've actually broken that neckline. So if we do we have broken the neckline, but if we do start to see something like this in a rollover, it's It's gonna be deadly, right? I'm probably gonna see the S&P 500 get down towards this sort of 3,400, 3,200 level. You see these major resistance. If we do get something like that, okay, that's the if scenarios, and the reason why is because no one knows exactly what's going to happen. But for me, I'm just like, okay, then what the pattern that forms next is going to give us a big key, a big clue, right? So that's scenario number one. Scenario number two is that we actually do get a pullback, because we're probably going to get a pullback like real soon. Like we're probably teetering on that pullback that's going to happen real soon. Yeah, it's going to happen. We're towards the end of this downward leg through here, this downward phase through here, and we're going to get a pullback, okay? It's just, people are like, okay, it's just how the markets work, right? We're probably going to get a pullback. Doesn't mean it's the end of the trend. It just means we get these pullbacks, as you can see, and if we do, we're probably going to get a pullback. That's going to be the telling. Do we get the pullback, and do we get something like that, which is what? High, lower high, lower high, right? Or is the next buying leg, because we're getting so much fear in the fear and greed index, and I'll get to that in a minute, is the next buying leg a bit of a slingshot move like that, back to the upside? Bit of like a V bottom. Do we create a V bottom? If that is the scenario, we may have just created a V bottom in the market. Right? Again, guys, this is just all about reading the charts. Again, if you really need help reading the markets, then go get that $4 sale that I'm running right now. Because the better you can read these charts, the better trader you be, right? Because now, as I'm talking here, I'm looking for the pattern, and the pattern's going to tell me what's likely to happen. Then I can take advantage of it, right? So waiting, watching, waiting, boom, hit. So if we do get a V bottom, we're probably going to get something like this, and then away we go. This may get us in. This may take, towards the end of May, or through the rest of May into June, and then maybe June, July, we start to see a very big move up. Anything's possible, right? But again, it's not about me. It's about what is going on with these markets. Because sometimes, guys, guess what? Sometimes it's okay to say, you know what? I'm not too quite sure what's going on right now. And right now, the market is very indecisive. We're not in a trend right now. We're not going up. We're not stair-stepping up. We're not stair-stepping down. Look at this here, high. And then we made this higher high. Then we made this lower low, right? There's very indecision through here right now. The next couple of weeks, maybe even a month, is going to be telling of, is this the major top? Or is this just a bit of a fake out, a bit of a fear, or is this like a bit of what we call a resting phase, right? Because we had a big move up, then the market's resting, and then are we getting ready for something like that again? That's going to be really, really, really telling across the markets of what's going on there. And we can see what's going on there when it comes to the fear and greed index, right? So you can see here with the fear and greed index, we're still pegging right now, extreme fear. So I'm actually expecting a really, really, really strong rally out of this. Now, when I say strong rally, it's basically a pullback. Whether that pullback turns into that V bottom I was just talking about or more, we'll just have to wait and see. But be alert about what actually forms next, because what actually forms next is going to tell us everything what's likely to happen for the rest of this year. So extreme fear, we're still down there right now. You can see we're just still down there below that extreme fear reading. I would prefer to see this thing just get absolutely just hammered. Right, just hammer the market. The reason why is I want to see this fear and greed index get pegged down to here. I want to see it below these lows here. And as you can see, right, when we get down towards these lows here, these here are what? Major lows in what? The stock market. Major lows in the stock market. We're getting down there right now. Give us another capitulation, a major low, and then something. What happens? Extreme fear comes from what? Stock market sell-off. Extreme greed comes from what? So you've got the extreme fear here, and then you've got the sort of, this top sort of, you can see actually the last few times, this top sort of 75% here is like the extreme, what's the word for it? Greed. So we have extreme greed, right? So we have extreme greed up here. We got the greed up here, and we got a little bit of pullback here. But once we actually do, and as you can see, right, when we do this, guess what does that represent? That represents the market going up. Then guess what? There's no more fear in the marketplace, or the fear's dissipating. So therefore, the fear and greed index goes up, right? Then it comes back down. There's major fear. There's the market rally. It comes back down. There's fear. We get the strong rally. Right now, there's major fear. We're probably going to get a strong rally. out of the stock market, that is, and then we're probably going to see something like that with the fear and greed index, and then it's going to give us a bit of a turning point. But right now, what's happening right now, we're getting towards that bottom, and we're getting ready for a really strong movement. So be prepared, guys, because we're getting ready for a very strong reversal, pullback, maybe even a bottom formation coming real soon in the marketplace. Now, the big thing I want to share with you when it comes to the interest rates, check this out. Okay, so let's actually bring up the interest rates here, because I believe we're getting towards the end of this leg of the 10-year, and let me explain why. So when we're looking at the 10-year right now, and we're looking at this, the thing is this, guys, right? The thing is this. There's a few things that happens in the markets. The first thing is how the markets work, how any market works, right? Even interest rates. How does the interest rates work? They go up for a bit, they pull back. They go up for a bit, they pull back. They go up for a bit. Let me change the pen. Up, pull back, up, pull back, up, pull back, up, pull back, up. Right? All markets work like that. They swing. Even look at the property market, right? They go through swings and motions and blah, blah, blah. Okay? So just understanding the foundations of how that works. What have we been doing, right? We've been going up, 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 up. So what's coming soon? What's coming real soon? A bit of a stabilization, right? Doesn't mean it's the end. Or we may just go sideways for a bit. But what is the big key here? The big key is the 52 moving average, right? As you guys know, I like to use my 52 moving average. And as you can see, that any market doesn't get away too much from my moving average before we start to come back. So the first thing is how the markets work, right? Any market out there, look, down, pull back, down, pull back, down, pull back, down, pull back, sideways, up, pull back, sideways, pull back, up, 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 up. Okay? So we're likely to at least, we are very, very, very high probability now, if looking at the 10-year, and actually, let me bring up the 10-year. Do I have the 10-year here? I'm pretty sure I do, don't I? Where are you? Here. Is that the 10-year? Yeah. Yeah, there is a, this is the 10-year on the TC2000. Let me see if I can bring up, I'll bring up the actual, the trading view version here, which is just US 10Y if you're using trading view, guys. You can see here, right, that because we're actually gone up, we're getting ready for what? Just a pullback. Well, it may be a pullback, it may be something else. And then secondly, we know we're getting so far away from the moving average that we're likely to get a cooling off period in the interest rates. I don't know what's going to cause that. It's like, what's the fundamental reason behind you? Guys, this is, I don't know. I don't give a rat's end. It's just how the markets work. Things cause this thing to happen, which is what I'm talking about here, right? The swings and the emotions and so on and so forth. So we're getting pretty far away from the moving average, and we've been going up for a long time. I believe this little push to the upside, this little push here, we're getting towards the end of this upward leg. Now, what comes next? Do we just go sideways and then rest there for a bit? Or do we actually get a pullback, let the moving average catch up, and then maybe it does what it does from there? That's the big key I'm looking for. So the interest rates, and same for the 30-year, the interest rates are going to start to cool off. What does that actually mean, right? Now, the thing is that when we're looking at the interest rates, same thing for, again, the 10-year, right? Look at the pullback, pullback, pullback. If you ever look at especially the 30-year, right now, we are so far away from the moving average, which means we're so far overbought from the moving average that we're likely to get what? This thing here is probably going to be the last hooray before we start to see a pullback in interest rates. Now, what happens from there? We've got to see. Again, does it go sideways, or do we get a pullback? So right now, we're seeing a lot of the commodity prices with inflation start to pull back. Right, a lot of those like timber and all that sort of stuff that were going up, we're starting to see that slow down. Even energy sector starting to get hit a lot of bit. You know, if we start to go to, if we have a look at oil, right? Even oil is starting to get hit right now. What does that all mean? Inflation is going to, we're at a turning point in inflation. The inflation, the inflation data right now is at an inflection point, and we're going to start to see things turn around. We're starting to see commodity prices get hit as well too. We're starting to see, gold, silver, even the mining stocks have been getting smashed, right? And we're starting to get this very strong pattern through here, which we're probably going to start to see something like this happening with gold. Gold. I've got gold in my mind right now. With oil, right? Again, but with all the other commodity prices like timber and soy meal and so on and so forth, we're starting to get a very big pullback. What does that actually mean? We're starting to get an inflection point right now as we speak. And inflation is going to start to pull back. We're going to start to see a slowdown in inflation. We're going to see the interest rates pull back a bit. What does that actually mean for that's the fundamental reason. What does it actually mean for the stock market? Well, then the Fed probably doesn't have to go so hard. If we start to see a really big inflection point in inflation and the interest rates are starting to drop, guess what that's going to mean for asset prices? You know what I'm saying there? So it's going to be really, really, really bullish in the markets. So get ready for a really big move. Again, this is the 10-year on my TC2000 platform that I use. And again, look how high this is. Look how vertical this is. This is, again, look, last time we got the vertical action, guess what happened? We had a very long extended pullback, right? Are we about to get a long extended pullback through here? Well, we are the most overbought right now than we have in a long time on the 10-year. And we are towards the end. This is the end of the move. So don't try and jump in, because it's going to, if this was a stock, you'd be like, it'd be very, very, very silly to try to buy it right now thinking it's going to keep going higher. So let's go have a look at gold right now. Let's have a look up with squeeze of gold. Gold is still actually in this overall sort of big triangle pattern that it's forming, but it's actually not looking too good right now. We're starting to get a very big pullback. Gold's actually starting to change its tune overall. If we have a look at this weekly chart, we can still see that we're still potentially going to make a higher low through here. Right, so we have this low, high, low, high, low, high, low. Do we create some sort of a higher low through here? We are at, there is a bit of a level of support here with gold, but gold, just like the stock market's getting pulled back. But guess what's going to happen on the second half of this year? If my scenario with inflation, with interest rates, which is bullish for assets, which is probably going to cause this, and we're getting towards an end of a downward leg on the stock market, and the fear and greed index is majorly extreme fear. Everything's pointing for an inflection point. Inflation and interest rates going down, and also a very, very, very strong movement in the upside out of the actual stock market itself through there. So we're squeezing up through here. What does it actually mean for gold and silver? Do we actually start to get a rally with the actual stock market that's coming? Now, it may not happen today, guys. We may get a little bit more downside. I don't know exactly when that turning point is going to be, but we're getting really, 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 really close, right? And are we about to see this thing really start to ricochet to the upside when it comes to gold? So that's what I'm going to be watching through here, because if we do start to do that, and we start to follow my scenario, and we start to do this, and then we start to do that, 3,000 gold, here we come. Gold's been one of those things that's like, hang on a minute, inflation took off, uncertainty, but gold did nothing. What's going on there, right? That's always been the confusion part about that. Let's go have a look at silver, and silver's been the one that's just been absolutely demolished. But once again, traders, as I've said before, that right now, do not be trying to short gold right now, or silver right now. Silver is what as you can see, right, we've had a very, 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 very big leg through here. This breakdown past support level is probably going to be an end of trend type of move. What do I mean by that? Well, we can see this major support level here, right? See how we're actually closing below that level now, or we're below that level now. Guess what? We're probably going to go down, 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 down. It's flush down through there. You have a lot of amateurs trying to short the market right now because they don't understand that. Guess what? How the markets work is they swing in motion. So we're probably going to get some sort of strong reversal out of the actual gold market as well through there. Looking at the actual mining sector as well too, and we're just getting, the mining sector is just getting absolutely just crushed. Absolutely crushed right now. It's surprising me. It really has. This whole big pullback here is surprising me. But that's what happens right on a fear level basis. But you watch, guys. You watch. Coming over the next couple of years, my positions always has been, even on the GDXJ as well too. The GDXJ has actually just had the biggest free fall in the markets. And again, very big, very indecision. There's a lot of indecision in the markets right now. Gone up, gone down. A lot of indecision in the mining sector right now. But once again, traders, I do believe that this little flush down here is really shaking the weekends out, and we're going to see some really, really, really good movement. It just, the really good movement just takes a lot of time, you know what I mean? This one here looked like it had potential, and then we got the flush down. We didn't actually get that. but I do believe we're getting ready for, this is going to be the decade of the mining sector. I really, really, really do believe that. It just, things take time, right? It just might not be ready to make that move yet. But once it does start to make that move, then it's going to be absolutely incredible. So, traders, so there you go, traders. Once again, if you're struggling to read these markets, and struggling to understand what's going on right now, then the better you can read the chart, the better trader you'll be. So head on over to johnsflashsale.com and you can grab that $4 sale that I'm running right now to my brand new chart reading and trading technique bundle just for $4. Plus I got a few other bonuses in there like trading systems and so on and so forth. So go over there right now, guys, and I'll see you in the next video.